All right, let's talk about Obamacare. So everyone's freaking out that the website is not working. And now some of President Obama's words are coming back to haunt him. You know how many times he said, if you like your plan, you can keep it, period. But let's not take my word for it. We've got a compilation for you.
First, no matter what you've heard, if you like your doctor or healthcare plan, you can keep it.
So let me be clear. If you like your doctor or healthcare provider, you can keep them. If you like your healthcare plan, you can keep that too. If you like your healthcare plan, you'll be able to keep your healthcare plan. Period. If you like your current insurance, you will keep your current insurance. No government takeover. Nobody's changing what you've got if you're happy with it.
Okay, so my favorite one of those is the last one where people start laughing, actually, because he's at basically a rally, and they're all like, duh, of course you could keep it. Yeah. Apparently not quite the truth.
Yeah, it didn't quite work out that way. The minute Obamacare exchanges began, they took my doctor out and shot him. And so I no longer have my same doctor. He's been executed.
But was that a death panel thing or just a straight up execution?
No, it was just Obamacare. Like, okay, now roll up the sleeves. This is what we really.
As long as it wasn't done.
No, it turns out that that's half true, half not true. A lot of the plans changed. In fact, a great majority of the plans changed. But wait, there's a second half to that, which we're going to tell you after we look at Kathleen Sebelius, because she was pulled in. She's the head of the Health and Human Services, obviously. They bring her into Congress. They're going to grill her. Let's see how that went down.
When was the president specifically informed of the regulation change? And if so, was it pointed out that this totally undermines his biggest selling point? Why was that change made? And did the president know it?
Well, Mr. Chairman, there was no change. The regulation involving grandfathered plans, which applied to both the employer market and the individual market, indicated that if a plan that was in effect in March of 2010 stayed in effect without unduly burdening the consumer with reducing benefits and adding on huge costs, that plan would stay in effect and never have to comply with any of the regulations of the Affordable Care Act. That's what the grandfather clause said. The individual market, which affects about 12 million Americans, about 5% of the market, people move in and out. They often have coverage for less than a year. A third of them have coverage for about 6 months. And if a plan was in place in March of 2010 and again did not impose additional burdens on the consumer, they still have it. It's grandfathered in.
But why not let the consumer decide whether they want to renew it or not? Why were regulations promulgated in the summer of 2010 that then undermine the ability for those folks to re-sign up, which is one of the reasons for the large number of cancellation notices?
We outlined a grandfather policy so people could keep their own plan. We then began to implement the other features of the Affordable Care Act. So if someone is buying a brand new policy in the individual market today or last week, they will have consumer protections for the first time. Many people in the individual market are medically underwritten. That will be illegal.
So what is she saying?
All right, yeah, so let me break it down for
Yeah,
you.
please.
So first of all, I love that the Republicans, like, this is the rare thing that they're kind of right on, but they screw it up anyway, right? By getting all the details wrong, etc. So now most of the plans did change. Now, well, the part they don't tell you is why. Because they got better. Okay, and it's because it was mandated that they cover more things than they were covering in the past. Now, does that mean that some of the plans' costs went up? It might. It depends on where you are in the income brackets, et cetera, et cetera.
Those are presumably offset as well by the tax subsidies. So that if the plan does cost more, you're also getting a tax subsidy that you weren't getting before. And this grandfathering goes back to March of 2010. It's terrible, terrible messaging by the White House.
Yes.
Once again, because what they looked at is they said they knew, the White House knew that 40 to 67% of these plans were going to change. Now the Republicans are saying it's 80%, perhaps it is. So if you're grandfathered, but yet your coverage changed during that period, the grandfathering expires. You don't get grandfathered. But what Cenk says is true, and what the Republicans are failing to digest and the White House is failing to share is that the plans got better. So you have to assume that people who are not going to stay with it, the person who's going to make a choice to stay on their plan, if it's a bad plan or it's an inferior plan to what they're now being offered, they're not going to stay on it anyway, because who in their right mind would?
2 points on that are really important. So number one, in the old plans, for example, you'd have to do a deductible to get a checkup. In the new plans, you don't have to. Okay, who's going to object to that? They got rid of my old plan where I used to give them more money.
Yeah.
Right, your monthly premium might go up.
Right,
but
in general, it's not. The market, so far, the exchanges have actually gotten you lower, for on average, lower rates. Not for everybody, but for most people, right? And then second of all, Michael's right. If you're an individual making under $45,000, you're getting a subsidy for it. If you're a family of 4 for making $94,000, up to $94,000, you're getting a tax subsidy for it. So for a great majority of the people, the prices went down and you got better service. Here's a stunning fact that I didn't know until I dived into the weeds on this. Did you know that the individual market plans, in the old days, 62% of them did not offer maternity care? Okay, so after you have a kid, well, anyway, good luck to you, brother, okay,
Later.
or sister.
Yeah.
Okay, you're on your own, right? That seems unbelievable to me. Now, understand that this is the individual market. If you work for a company and you've got the insurance through the company, those are usually better, right? This is usually a better package. Now, if
And the reason why they're usually better is because they have the power of a group negotiation.
Oh, that's right. That's right. Like, for example, if you were workers and you had like a union, you might be able to band together and get a little bit better for yourselves. So that's point number one. So you're getting a lot more, and that's part of why the plans change. They change for the better. And what Kathleen Sebelius is saying there is that all that 2010 gobbledygook is, look, if your plan already kicked ass and you didn't have to change it to meet the new standards, great, keep it. Yeah, absolutely. So now one last stat about this is interesting. So NBC News says, look, 75% of the plans are changing, right? Obama administration, is livid about that, but they're wrong. Experts tell the Washington Post, in fact, 50 to 75% of the plans did change, right? As we just explained, usually for the better, right? Now, but what they don't tell you is in the individual market, 17% of individual market subscribers purchase the same plan for 2 straight years or longer. So that means that 83% of people change their plan every year anyway.
Exactly.
So like if 75% of the plans changed, what difference does it make? 83% of the plans would normally change anyway.
Anyway, yeah.
Right.
And that again goes to this. Listen, in 97 seconds here, we've broken it down. The White House should have been, how they're so unable to message, how these people can run campaigns, national campaigns, so beautifully and enviably, and then this comes out, and this story should not have had to come out.
Yeah, but it's part of the reason because he had to sort of be dishonest to sell it in the first place. He had to keep repeating the same thing over. You're going to keep it, period, because that would at least sell it. And then he knew once we sell it, it's obviously going to change the way the system is built, and some of these plans are going to be better or worse.
That's a fair point. He did have to do it to sell it, but he was selling it, while he was selling it to the American people in a presidential election, he was also selling it to a Congress that was poised because of the election to pass some sort of health care. All he had to do was put a clause in that. If your plan changes, you won't have to leave your plan because this is going to be better. If it's not better, don't join it.
Right. But isn't that not how politics works, sort of? Like he couldn't have said you can keep it, period, but also you don't have to.
No. You know what? I've been Rubin. Dave's
once in a while I get one.
Yeah, and I'll tell you what, look, here's the thing. Who cares now? Like, it's already passed.
Well, that's from the old Republican playbook that we love, which is obfuscating to get your point across, right? And then you have to go back and answer for it. But now they're not answering for it well enough. The Republicans would answer for it or ignore it, and now the Democrats are back on their heels, and the White House is back on its heels, and Jay Carney is back on his heels.
So I would agree with you, too. So let me clarify. So I'm with Dave. At the time, it's like, all right, and you can keep your plan unless it's actually slightly better, and the clauses are based on 2010. Okay, just say, you can keep your plan. And you can. If your plan rocks, you can keep it. Okay, there's nothing wrong with your plan. Otherwise, I'm going to improve it. Now, so Dave's right about how to sell it. I wouldn't have gotten into the details. But Michael's right about how they're bungling it. Now, I'd come back in if I was Jay Carney and be like, look, we made your plan better. Okay? That's it.
That's the messaging we're talking about.
Yeah.